Do you need a stop, or just a way to stop your loss? This is a controversial question among some traders, but there's a very clear answer. In his book, What I Learned Losing $1 Million, Jim Paul describes his experience losing nearly $1 million at the Chicago Board of Trade, or CBOT for short. Jim was overconfident. He lost a huge amount of money, was sacked from his job, and ended up in debt because he never questioned his decision, but also because he had no way to stop the losses mounting. Whether to set a stop is probably most important for scalpers. Many scalpers think they don't have time to set stops. Some scalpers also don't know where to set stops because they can often be triggered prematurely on low time frames. Some day traders and swing traders use pending orders in the opposite direction instead of stops. This is rarer now, but historically it was a common alternative to just setting a stop. Manual closing should be avoided because it's inevitably an emotional decision. Trading is neither really an art nor a science, but where possible, you want to approach it scientifically and manage risk using a process. It's difficult and time-consuming to develop the excellent emotional discipline needed to get manual closing right. So why not make it easier for yourself and just use a stop instead? Setting a stop and target is very quick and functionally easy. It only takes a few seconds to add them on opening or after having opened a trade. You can set stops and targets for pending orders as well, not just market orders. MT5 is even easier than Exness's platform. Just click and drag from the line representing an open position to set a stop and target. That way, you can set auto closes based on technical areas by sight without needing to enter any numbers at all. It takes only a few seconds, so there's really no excuse not to do it. Setting a pending order in the opposite direction takes longer than setting a stop. Closing manually almost always leads to traders cutting profit short and letting losses run, which is exactly the opposite of what you should be doing. It's also not uncommon for a trade without a stop to enter a sudden large loss around news if the result is surprising. I strongly believe that setting stops based on support and resistance, indicators, and percentages of loss is better for almost everybody to manage risk compared to manual closing. That's my opinion as a trader, and it's shared by thousands of others, including Jim Paul, who had to learn the hard way. For more on how this approach to setting stops and targets works, check out the other video in this series, The Variety of Approaches to Setting Stops.